The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Today, the 22nd of January, we're looking at a market that's up 152 in the Dow at 16,000, finally above 16,000 at 16,031. S&P is up 27 at 1896. You got the comp index up 83 at 4,055. The QQQ series is at 102.97, up 212. Nice move there. That's 2.10%. Oh, it's leading today. It was lagging before. Good. We've got gold at this particular point. The gold index is up. I'm sorry. It was up. Yes, it is. It's up 3 at 1101. You've got silver up 0.20 at 1429. High-grade copper is still in that 2.50s area, and we're going to be watching that closely. Meantime, back at the ranch, the dollar's up 26 cents at 99.31. Bonds are the TLT at this point is, let me just do it right here. The TLT is down. TLT, wow, what did I just hit? Oh, I didn't mean to do that. Where did that come from? Oh, no. Uh-oh. That is the Dow Jones Wilshire U.S. Steel Index. Oh, nice little pop-up, but it's not holding. I wonder if I hit that by mistake. I didn't miss that. Oh, I did. I put the TLT in there. Oh, I hate when I do that. Big mistake. All right, TLT. Not your problem, mine. The TLT is down 65 cents at 125.17. Peak D, remember we talked about that peak D the other day that was at 127.92. Pulling back here, suggesting that this market has a little bit further to go on the upside. Meanwhile, bonds at 125.17 are just above the 124.85 9-period exponential moving average. The MACD is still strong. The stochastics at 81%, turning down, but still at 81%. And the weekly chart is improving, and the candle this week is a long-legged doji. We'll see where we close, but it's in leg B once again. Each leg B has been failing, so we're going to be watching this one closely. Let me move this 120-minute chart out. It made a peak F top right there. Let me type that in. Technical Friday. I'll explain what I just did. I put in an E on that peak, and I put in an F on that peak, and peak F is where you got to be really careful. That's where you can have the sharpest and longest decline, and that's exactly what seems to be happening right here. And the next level of support is 123.37 in the 200-period exponential moving average in the 120-minute chart. 125.20s is really quite important. So we're looking at this as if some type of consolidation is going on as the market is rebounding from the low of yesterday or day before Wednesday. And so the next thing that I want to look at is, let me see, a couple of things I had in mind. Oh, you've got to, because it's Technical Friday, you got to be prepared for some little whippiness here. This is not coming off a major low like August the 24th. There are many other conditions. So I had a couple of emails. I'll try to deal with them now. The one that I wanted to go to first was the one that came first. Let me see if I can find here, because it really is. I've mentioned this before. Same person, and this person trades the futures. And if I can find it, there it is. Okay, got it. Now, if I can twist my neck around so that I can see. Hi, Basil. After several tries, got long ES in 1860s area, doing well so far, but shakeouts are my biggest weakness. Hope we're done with all that on this run. If we take off from here strongly, I assume this is finally the coda you've been waiting for. So that's a question. I'll deal with that in a minute. Let me just say, no, it isn't just yet. Would 120 That's January the 20th. Be considered another internal low that requires a residual low in a few weeks, or is that instead a second residual low? Let me just briefly talk to this issue. I've spoken about this. It's something that occurred back in the mid-1980s, and I do want to thank, gosh, now I can't remember who it was, Eddie, I think it was, who sent me a note saying that it was General Foods. I mentioned that there were 3 generals in the Dow back in the 1980s. Now, I said I thought it was General Foods, and I think that that was confirmation. I think I'll have to double check, but I believe it was General Foods. And what I'd found was that there was a period where sometimes you get an internal low, and that's where all the technicals have deteriorated terribly. And then 6 weeks to eight weeks later, you could get what I call a residual low. And that low used to be where you went either towards, exactly to, or just underneath the previous low that I call the internal low. But at that point, the technicals and many of the stocks had already started to improve. So that was an emotional low, but it wasn't the real low, because the real low had already occurred. And as I say, sometimes that real low, if you think of October of 2002, and if I say it, I better check. You remember the Dow made a low, and it was only in March that the S&P, and I think it was a semiconductor. Let me do this right now. I don't want to just guess. There it is. The October low of 2002 in the Dow, and the S&P, SPX, remember Technical Friday today, I get a little bit into the nitty-gritties, made so much for that. 994. So no. 833, 768, and then 788. Okay. This is not the example. I guess it was a semiconductor index. This is great. In the back of my mind, I had this, that one of them made the low in October, and the other one did the retest in March. And I'm going to sneeze. Excuse me. Sorry about that. And then what happened was, and then the markets took off. So I'm going to just have to review that. I just can't remember why I'm forgetting it like that. I knew that one of them, and that was, let me check this out. So that's the S&P, was the QQQ series. And that made it slow in October. Maybe I've got it wrong. I thought that there it is. It's in 2008. The semiconductor index went to 2468 in November, and then in 2468, right. And then in March, it made a higher low. I knew there was one thing that had a discrepancy. One was the October, one was March. All right. So now, what I'm talking about there, that would be a perfect example of the residual low. You see what happened? The stochastic had already started to improve. Some of the stocks, I wonder if I can get Intel going back that distance. Yeah, that's it. And then some of the stocks like Intel had already started making its low. So that's what I was thinking about. Now, I haven't actually finished the question. The question is, to cap last August, September low. Not sure if I'm looking at this correctly, but I don't want to be caught off guard if the ES rolls over at 1980, my target. I'll talk about that in a minute.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4700 855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let me just deal with this right now. As the market stands right now, this is still that fourth wave in Elliott wave. This is still in the Chapman wave, a monthly peak of significance. I am still waiting for the technicals to say to me, and my suspicion is that it's going to be like this at the February meeting for the Fed, they're not going to turn around and lower rates at all. But there's a chance that the market anticipates that in March they're going to do it. So I'm anticipating that it's within the late February, early March period, that's where we make some kind of a low. And that's going to be the low that either tells us we are about to start a big move to the upside. This would be part of the Fed. I'm not going to say that it's political. The Fed never does anything political, as we know. So I'm suspecting that it's just the Fed gets a little nervous and they try to ameliorate all the downside activity in the market by doing something to help the market. And that is to talk maybe about lowering rates or whatever it is. That could be the headwind that we need. Those are all speculative things. I'm doing nothing now on the very long side, that is the longer term, other than a dividend stock that we've held through this decline, which is still doing really well. How long it can last, I'm not sure, but it is. And trades, as we went along yesterday in the Dow, I did get emails from subscribers saying, I don't know how I missed that. The short that we had on the volatility index hit our stop yesterday. And that's unfortunate because there was about a 15% gain in just hours. So I apologize for that, but I had to put a stop in. A VIX is something that you do not want to be wrong on the wrong side of that. So that's a shame. Now the question is in trading. So let me do this. Okay, this is the 10-minute chart. This is with the Chapman wave notations, and there are no moving averages. There's nothing other than my notations and my the arch and the cup formations that I always look at, and trend lines. That's all there is. And I've been practicing and practicing. It's like a new instrument I've adopted over the last X number of months, 6 months or so, trying to get rid. I know what the MACD and stochastic, or at least I'm pretty sure what the MACD and stochastic are doing. I've done it so much. I'm trying to make the naked chart tell me as much as possible in chart formations. We'll come back to this. I want to go to our first caller. We've got Tim in Denver. Tim, how are you?
Good. How you doing, Basil? Thanks for taking my call.
My pleasure.
Quite a week.
Yeah, this has been quite a week, yes. So, Tim, you'd like to look at what?
I was kind of looking at. Would you prefer to look at oil or the IB or biotech? So I'll give you a choice there. I want to look at both, but I don't actually
because they're both important, and I was going to, for some other questions that I had, I was going to go to oil in a moment. Let me just do the IBB right now. The IBB trading up 7 at 285. Do you have a position or not?
No, I don't. I was doing oil this week, and
that's good. Okay, I'm going to suggest stay with oil, because I think that's going to give you the greater volatility. That's really what you want, is the volatility, and probably you want the volatility on the upside. This is what I'm looking at here. The IBB, the iShares, the Nasdaq Biotech ETF, which we are still short from way up there, 393. It's at 286 right now. It did go down all the way down to 268.52 just 3 days ago. So it's up about 20 points from there. I'm looking at this and I'm thinking, you know what? I'm willing to go out on a limb here and say that all the funds that had put money in for years and years and years have probably taken off a chunk, just a huge chunk of their biotechs, and they are looking to replace it with another area. And that might be that they're going to try to go back into the oils. I don't know yet. But I don't see the fact that the IBB failed so miserably the last couple of days to participate at all in any rally. Even today, yeah, it's up 2.6%, but yesterday it was down sharply. I think that it's an area that I would be looking at to add to the short position on nice big pop-ups. This is not good enough. I want a move in the IBB if it can get to the 292 to 297 area. That might be where it suddenly turns down again. But I'm rather looking to short, other than what we've attempted in my opening call, is for a couple of days we've been trying to buy the long side and been stopped out with a very quick loss. I'm done. I'm actually done with now trying to buy it. I have to go back to my thinking is that to stay with the trend, and the major trend looks down. That's number one. So I hope that helps you in terms of the IBB. If you want to play for a quick bounce, it's got to be like intraday or maybe a 2-day bounce, and then you got to raise your stop or just get out. So here we go. Now we're looking at the USO, which is the United States Oil Fund, trading at 9.06, up 50 cents, up a whopping 5.84%. And yesterday had a spectacular move. Now, this is something that has moved from a low of 792. So this is percentage-wise. This is very big for the USO. Now, it has done something like this previously, maybe not as big, except if you go back to, I think it was August of last year. Let me just double check. Yeah, August and beginning of September. So do you have a position in anything in the oils?
I closed. I was long, and I closed it out this morning. That's a big enough move for me for a week.
You see, I like that thinking, and I'm so pleased you brought that up, because I'm going to go back to the question I had from Chris about the E-minis that he's trading, and I'm going to talk about percentages and how I prefer when I'm doing the trading, short-term trading like that, is to have quick moves. And then I like to, if it's possible, I would like a bigger move to make up for a couple of small losses, because for me, I love the momentum. This is just the way I like it. I'm either in a position and I just don't even look at it for months or even years, or I am in something and it could be 15 seconds to maybe an hour. Hours are very long, maybe 15 seconds to 20 minutes, maybe 10 minutes. So that's you've got to know your mentality. You've got to know what you like to do. So the fact that you qualified that by saying it's enough for me, it's like a week's gain. I love that thinking, because it says it can go up from here. It doesn't matter, because I know that I'm good at looking at the right opportunities. And I think I'm trying to talk for you. that I'll be able to repeat something like it. Maybe not as big a gain, but a stronger move in a stronger trend. And that's what I really want to do. So identifying the trend is important. Identifying a trend that is reversed very sharply. You realize this is a gap. This could be an island gap right now in the USO, because the high of 8.90 on the 15th had a gap down from the 904 level on the 14th. So you've got that gap, and today's low so far is 8.97. So 8.97, you've got 7 cents to go, or 8 cents to go before you fill the gap. So if in fact USO doesn't pull back very much, and then over the weekend everyone starts talking about this is a great time now to get into crude oil, the area of anything to do with oil, then you might not fill the gap and you might move up higher next week. But this is the scenario that I'm looking at. Have you got a moment, and we can talk when I get back?
Yeah, I'll wait on, Basil.
Great. Okay. So we have Tim right now in Denver, and we're looking at the USO, which is trading at 9.04, and the Dow's up 138. We'll be right back after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoads, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, we're back. Dow's up 143. We're on with Tim in Denver, and we're looking at crude oil. We're looking at the USO. I want to put this up and also maybe look at the XLE, but most importantly, there's a difference between the USO, which gapped open sharply, and crude oil, where you can see on the chart that it's full the gap. That should be an A, not an E, and it's in a leg A up, And what's important is this candle here in the weekly chart. And if you're looking at the candle here, you'll see that this blue line in the middle chart, that's daily, weekly, monthly. I could go to a 120-minute chart, but I don't want to right now. I just want to stay with this because I want to look at the bigger picture. In this particular context, the weekly chart, if it closes anywhere here, will be a very nice candle. Long-legged doji to the down, a long-legged candle to the downside, closing at the upper side. It looks a little bit like a butterfly in a sense, but candle. The MACD has not pulled back as sharp as you would have thought with this major move to the downside. And what that's saying is that within the context of the look-back period of the moving averages, there's been enough internal strength, believe it or not, in the MACD to have held without going to lows. And that says to me, it's kind of critical to keep that in mind, because what it's saying is that the upside might be limited, and at some point we're going to come back down again. So that's looking a little further out. So this is what I'm going to suggest. Tim, in your my recommendation would have been, if you were in anything like the USO, would have been to take a chunk off to keep some part of it, because you got in obviously at a very nice price. And at this point, I'm not sure it's going to go back, the USO, to, I'd like to consider it if it had to go back between 860 and 850. I'm not sure it's going to do that, but it might go into the gap, and it might go into the doji candle body of the 15th, and that's where it opened at 879 and closed at 879. So my thinking is, if there is a little bit of a dip and it doesn't go much below the 880 to 870 area, and then has another rally making, say, leg B, then all of a sudden, I think you've got the criteria that says there is enough energy now in, I can imagine how many people are short crude oil. There's enough energy for you to have a position. That's the reason why. Would it be nice maybe to have kept a little bit, but that's okay. Taking a good profit, there's nothing wrong with that. It just makes it a little trickier trying to get in if we've got a takeoff here, because if there's a takeoff, you probably won't fill, at least not for 3 to 5 days, you won't fill the high of yesterday of 869. So my recommendation is, now I'm going to go to the 120-minute chart. So you're quite prepared to take short-term positions. Would you be interested in having something that lasted a little bit longer?
No, actually, I'm pretty short-term because I've been using the UCO.
USCO, okay.
So, yeah, I think I called you about that maybe a couple of weeks ago. I've been using the UCO for long oil.
Okay, so
the biotechs, I've been using the LABD to short. So that's exactly my plan. I was either going to wait for a pullback in oil and go UCO long again, kind of like you're saying, or I'm going to wait for the biotechs to get higher, and then I'm going to use the LABD. I want to short them again. So I've got the same plan. Whichever comes first is kind of what I'm going to do.
So what you've distributed now is you've given me enough information to say that these are instruments that you are really totally familiar with. I'm going to suggest to you that on the USO, you can use whatever it is, the SEO, it doesn't matter which symbol you're going to be using. But in this particular instance, the 869 level of the 120-minute chart, 9-period exponential moving average, I don't think it's going to get there. I think that the takeoff here is such a quick takeoff that most of the time, today would be the day that it would spike up, and by now you'd be at the 890, 888 level. This looks like it's holding quite well. So it might be a little difficult to get in, but I see that you've got patience. If you don't get it on another spike, then the level to look at will be a 901. If it spikes from here, then if it comes back between 905 and 893. That, to me, would be another level that you could look at to enter. But you're right.
You're looking at the USO right there, Basil? You're looking at the USO?
Sorry, I missed that. There was a phone call going. I was trying to get rid of it. Say that again?
You're looking at the USO right now?
I am. I'm looking at the USO. If you want, I can just do the same on the SCO. The SCO would have, SCO.
That's
no.
long. That's the shorter.
Yes.
Yeah,
Oh, okay. That's the wrong.
I
No,
mean,
okay.
UCO.
Oh, of course, UCO, of course. UCO. Yeah, so the same thing in the UCO, except that the levels to watch would be, it's at 8:42. I would look at right there, the candle of the 15th opens at 7.99 and closes at 7.99. So I'd be using somewhere in that area, give or take a few cents higher or a few cents lower. That's where I'd re-enter on a new position. And if it pops suddenly on Monday and it's already at 880, then you're going to have to use the 9-period moving average of the daily at 852 to 847 as your entry point. But I think you've got absolutely the right idea. And for the short term, I would not be surprised if this bounce lasts a little longer than what most people think in oil. But my eye says, the way I'm looking at it, oil will go lower after this rally is complete. That's the way I'm looking at it for now. Hope that helps you, Tim.
Thank you so much, Basil. You're great. Thanks.
Thank you very much for calling. I do appreciate that. So now let me just go back here for a moment. I'd like to go, this is a 10-minute chart. Why is the mouse? I got a little mouse that's got a little NC there. We'll use this mouse right there. See, the level that I looked at in the Emini, so this is to answer the question to Chris. Chris, within the context of the restarts, in other words, those takeoffs that fail, my thinking here is what you said to me, you already said 1980 would be your target on the E-mini before you thought it would reverse back down. You know, I wouldn't even think that high. So I think that it's the time frames that you're looking at. And let me just do this. I'm going to go to the 120-minute chart. I want to show you something. ESH 16. I'm in leg E, not I. The E-mini is in leg E in the 120-minute chart. The weekly chart has the U-shaped pattern and looks like it obviously will close way above the 1824.25 low of August of last year. And that says to me that you can have a bounce and you can go bounce to the 9-period exponential moving average of 1964. But you know, I don't like to do things that way because there are a lot of hurdles. And on the way up, you've got trendline resistance at 1915. You've got trendline resistance at 1932, at 1939. And we haven't taken out a very important high, and that's the high of the 19th of 1907.50. So I like to go step by step. I would not even be looking at numbers like that at this point. I'd actually be saying to you, let's see if certain levels of support like 1881 to 1881 to 1872 are going to hold them as a support side. So I'm taking a little moment here in the next segment. I want to do a little back and forth thing to show what I'd be looking at and why it's not bad to take small losses if you get the trend right.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. The other thing I forgot to tell Tim, if you're still listening, speed is of the essence right now. You don't want to go sideways, chop, chop, chop. It's got to be a quick move. This has to be a V-shaped bottom if it's going to have some durability. You must also remember that if you go back to the Dow chart just for a moment, just to show you an example, you remember that August 24th low? It was spectacular. Not that the next day was a lousy day. And then there was a fantastic move on the 26th and the 27th. And then it suddenly stalled on the 28th at 16,669, having come from 15,370. Hey, the 3,300 point move is pretty big. And then it comes back and it's sat on the 15,000. Call it the 16,000 area for a long time before it actually broke out. It was just going into October, beginning of October, that it broke out. There was an H pattern, very positive break to the upside. So I think this is somewhat different. So the fact that the market's fading down, only up 106 after being up 240, I think it was, and the S&P is up 24. This is the kind of action that says that the pull of the bears is still very strong. So now this goes to the question that Chris was asking: what do I do? I get in, I get taken out, getting taken out, and then suddenly it works. Well, if you're looking for a bigger picture, and because Chris, you spoke about the 1900s and in the S&P, to my thinking, I would much rather look at each. I was a hurdler once upon a time. You got to look at each hurdle. There's no way you can skip a hurdle and go 2 hurdles at once. And that's the way I've learned to do it here in the marketplace. So I'm prepared, as we did in the Dow. We got 3 times long the Dow, around about, what was it, 15,600 or 700. And it was a fantastic move, but we got stopped out of one half a position yesterday. I don't mind. I've got that back as a buy if there's a big pullback, because I think that there's enough upside momentum right now to try to go higher. But until I see all the signs, look at the stochastic's only at 15%. Look how big the move was in the stochastic. The stochastic went from 11%, around about 8%. It went from 8% on August the 21st to the move in the that big turnaround. It was already up in the 17 and then 25% within a day. So within 3 days of the low. So this is just the beginning of a turnaround, and we've got to treat it with respect. I don't want to. It went right to the 9-period moving average. That resistance was at 16,149. Today's high is 16,136. Just missed it, but look at that. And then it got repelled. It hasn't closed. The Dow has not closed once above the 9-period exponential moving average, the 9-period, since December the 30th. This is very unusual, this kind of move. So you've seen it on the upside, but not on the downside. So you've got to have respect for it. That's number one. Number two is, had an email saying, hey, and the shorts haven't even started covering it yet. There could still be another move. I think that's in the back of your mind. I'd like to keep that idea that, yes, we still got a lot of shorts to, believe me, a lot of shorts to cover. But they don't have to cover. And especially if the market keeps popping up like this and then giving back 50% or more, you'll be seeing people add to the shorts. So that says to me we have upside. I did not get a volume spike. So that says I can't say to you, hey, I've got that volume Chapman wave volume spike in the volume and the VIX. The volume as the price came down to a climactic low. And that's why we should go up for at least 28 sessions. I don't have anything like that right now. So I'm going one step at a time. I think for the day, I would like to think that most of the downside activity has occurred. So that's it. Now, to Chris's question, let me just use some example. Let's go to the 120-minute chart of the Dow, of the E-mini. You see, the E-mini gave you very little opportunity to get in. So the fact that you got in, I must say, I had an email from someone just after it happened. He said, I bought the SPY heart attack trade, he called it. I've mentioned his name before, and it was same thing once before, and he did a fantastic trade. Heart attack trade, I bought the SPY at 181 point, I think he said 07. I'm really upset with him. He completely missed the low, because the low was 181.02. I mean, 5 cents. Give me a break, huh? Okay, that is amazing. And what a trade. It went from 181.07 for him to today's level right now of 189. That is a spectacular trade. Not many people can do that. That was brilliant, and that was highly praised. So you've got to know yourself. You've got to know what you're prepared to do. Heart attack, I'm done with those things. I prefer to stay away. So I have a slightly different attitude. And so let me go back to Chris. Chris, the fact that you did get in, you've got a very good gain. I want you to learn from that experience. I want you to go back to where you were when you got into the trade, where you were just before that when you were stopped out. We too were stopped out before trying to get in. But I don't mind with a tiny stop of 3%, 1%. These are nothing, because when you really get the move, you're looking for a 12 or a 15% possible gain. And that's really what you are trying to attempt to do. I'm going to come back to that as part, not part of my Friday technical trading thing, but part of what I want to look at in terms of takeoffs. There are times where you get a starting position and there's a pop-up and it pulls back and it fails at an A-. It doesn't even go back to a retest below the low, but it does fail enough to say, I'm out of here. Then you try to get back in and it pops up and it comes back. The rule of thumb that I have is that if it happens 3 or even 4 times, but you haven't taken out the left side low at all, you haven't even come close to it, when it does succeed, it's going to be a fantastic move. This is a little different. This is giving you a little attempt at a V shape. We don't know yet. It could still be an arch pattern. As I say, we want to rebuy the position we got out of yesterday, lower than we got in, lower than we were stopped out. That's the way I want to trade this market with respect. I don't want to swing for a home run. I want to just keep making good plays, and that's to me the most important thing. And if you've got shorts and they're not working, you're in the right area for the shorts. I mean, we have a short now at 237. It's only up $1 in this kind of market, and we've been short for a while, quite a while, 20 points, in fact. So you've got to also know yourself, and that's really important. And I believe me, even after all these years of these thousands of trades or whatever, I'm still looking and at learning things new. You can see what I've done here. What I've done is I've taken it, and I've got not the MACD, not the stochastic, just what I know so well about trend lines and arches. Markets made up only of straight line moves or inverted V's or arches or cups or V-shaped patterns. It's only 3 patterns: straight up, straight down, and an arch or a cup. And the arch or a cup could look like a V, but it's still the same principle. So I wanted to do that, and look what we've done. We've just taken out the left side low of importance at 1884.75. So that says to me that the selling pressure is still quite strong. Let's just look at the volatility index. It's at 2403, way down from the high that was made at 3209. And 3209, well, that's a big percentage, folks. So if the market actually starts to fail here and the VIX doesn't go up, it says, you know what, the buying pressure is still there. You don't have to worry. But if it does go quite sharply, that's not a good sign. I'll be back. Final segment coming up. Dow's only up 99.
Hi, I'm Steve Rhoads, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So just let me do this question about General Electric. Let me just show you this. This is with the Chapman wave projections, the support and resistance levels. That whole 3173 area and the daily chart, 3129 to 3173. Look at all those resistance levels up there. Look how it broke the 2972 support, and now you've got 2732 to 2773. So the earnings, as I didn't hear it, but I'm reading here that there was, where was it? GE reported earlier today, revenue miss, but EPS good. Well, I don't really care too much about that. What I do care about, and let me just go out of this for a second. What I do care about, where did it go to? Oh, no. That disappeared very quickly, didn't it? What I do care about is price. And as I see it, let me activate this back again. It's over there. All right. Now, what I do care about is that weekly chart has got the peak E, and it's now underneath the doji close of last week. That says to me GE is under in a consolidation. It's under selling pressure. The monthly chart has been spectacular. My thinking here is, and I have to put into the pie the fact that they're going to move to Boston. 800 of their executives are going to come to Boston. This is going to be really costly for them, and they're giving up. It's a costly process. It takes a long time to recoup that kind of expense. Maybe not for GE, but normally it would. My biggest concern here is that GE at the moment is at 27.83. The low of 27.48 that was made three days ago with a round number close of 28. We're now under that round number close. So I'm going to say, and one of the reasons why for my subscribers, we're not doing anything with GE, I just use it as a market indicator, Dow indicator, and look what happened. The GE plummets today, 0.75 down 2.62%, and the Dow, which was up 250, is now up only 100. So in a sense, GE is saying to me, be a little careful here. That's number one. The question about GE, I'm just going to say, if you are long and it's your core position, you've got to give it more than a day or so of a pullback like this. But I would just say, and I have been saying that if it closes under 28 or 27.50-ish, somewhere around there, if it closes under the 27.48 level, I definitely would lighten up. There should be a bounce, and you should get some of that money back again by next week on any further bounce in the market. This is a one-day event that is affecting it negatively, and it would be way worse, of course, if the market was down 100 instead of up 100. So you've got to give it a little room because the monthly chart is still good. But I'd also be taking a little bit off. I just don't see any reason why you need that risk. Why? Because if GE is going to have a great move to the upside, it's got a lot of resistance in the 28.80. So a point higher, you can see whether it's trying to break through. And if it breaks through, I would grab it 1 penny above the 29.25 high of the 14th. That's a point and a half from here. I don't care. I want it on the upside, not the downside. Okay, that's G. Next question I had was the Qs. Just do this real quickly, and then, of course, you're going to your swimming lesson. Don't forget great programs, and check out my opening call over the weekend. I think you'll find it very interesting. Maybe you can get it now, and then you get the password and everything. Okay, QQQ's up 219 at 103.03, sitting right on the 9-period exponential moving average. They finally are participating. That's good, and they never even went close to the low of 84.74 from August. So far, this is the one benchmark that I can say gives me hope that at some point in the next 6 weeks to 8 weeks, I'm going to get the kind of signal that says maybe now we can start going towards the highs over the rest of the year and into 2017. I don't know. I'm not trying to be Pollyannish. Let's go one step at a time. I want to see the Dow close today closer to up 160 than closer to just 60. I want the upper side to be seen, not the downside. That'll be very positive, but not positive enough for me to say, look at the smash that we went in 2 days going into the low of the 20th. We haven't even gotten back above the candle of the 19th at 15,900. Really important. Hey, folks, have a great weekend. See you on Monday, and stay tuned for some great shows coming up. Basil Chapman signing off. Dow's up 111.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.